Okay, let's unpack this. You know that friend, the one who's always sending you these huge PDFs and earnings call notes about the big IT consulting firms?
Ah, yeah, I think we all have one of those.
Well, today we're diving deep into that exact stack. Specifically, we're going to tear apart the Q2 fiscal year 2026 results for Infosys.
Right. And our mission here isn't just, reading out numbers from a slide. It's about finding the story behind the numbers.
Exactly. What's the real feel for global demand? How serious is this big push into AI they keep talking about?
And, how does a giant organization, we're talking over 320,000 employees, actually maneuver operationally to stay ahead?
And the big picture takeaway, it kind of hits you straight away. Despite leadership constantly flagging this uncertain global macro
They
environment,
keep saying uncertain, yes.
they still posted solid growth.
Mm.
And I think critically, they tightened their forward guidance.
That's the key point. They moved the full-year revenue growth forecast. It was 1% to 3%. Now it's a narrower 2% to 3% range in constant currency.
So tighter means more confident, presumably.
It absolutely signals more confidence, yeah.
Yeah.
And just quickly, for you listening, when we say constant currency or CC, we're basically taking out the noise from currency swings.
Right. It shows the core business performance.
Exactly. And narrowing that range, especially lifting the bottom end from 1% to 2%, tells you they feel much, much more certain about hitting at least that 2% mark.
Okay, let's dig into the actual Q2 financials then. Total revenue came in at $5,076 million. That's about 44,490 crore.
Mm.
Quarter-over-quarter growth in constant currency was 2.2%. And year-over-year, that landed at 2.9% CC.
Which, for a company this size, 2.2% sequential growth is decent, solid.
Yeah.
But maybe not the explosive jump some were hoping for with all the AI talk.
True, maybe the AI revenue boost isn't fully kicking in yet on the top line?
Perhaps not yet. But for me, the real interesting part is in the efficiency numbers.
Oh, yes, this is where it gets quite strategic. The operating margin, it landed at 21.0% for the quarter. That's a sequential bump of 0.2%.
And that small fraction, that 0.2%, that's where the story is. They specifically called out their internal efficiency program, what they call Project Maximus.
Project Maximus. Okay, what did that do?
Well, it delivered 30 basis points. That's 0.3% of that sequential margin expansion.
And why is that 30 basis points number so important? It sounds tiny.
It sounds tiny, but think about what it allows them to do. This isn't just, random cost cutting. They're strategically generating capital internally.
Yeah.
That efficiency gain let them absorb some pretty significant cost headwinds. Things like investing heavily in new AI talent, salary increases, the cost of hiring over 12,000 fresh graduates in just 6 months.
Right, those are big costs.
Huge costs. And they absorbed all that and still expanded the margin. Project Maximus is basically funding their big external AI push. That's the real financial play this quarter.
Got it. And speaking of funding and cash, the free cash flow, FCF, was really strong. $1.1 billion, or 9,677 crore for the quarter.
Yeah, very robust. And that kind of stable cash generation is exactly why they can keep their promises to shareholders.
Like the dividend.
Precisely. The board declared an interim dividend, 23 euros per share, getting paid out this November. It fits right into their policy of returning 85% of free cash flow over 5 years.
Solid cash flow, happy shareholders. Makes sense.
And one last quick point on risk client concentration is low. No single client makes up more than 10% of their revenue. That's always good to see.
Okay, so margins are looking good, helped by Maximus. But if the market was really firing on all cylinders, wouldn't they be guiding higher than just a 3% max growth for the year?
That's a fair question.
What does that narrow 2 to 3% guidance actually tell us about, the underlying demand they're seeing?
I think it tells us they're much more confident they won't dip below 2%, but they are definitely still seeing that uncertainty we talked about.
So the caution is real.
Absolutely. The leadership basically said, look, that 2% floor is pretty much baked in. But hitting the 3% ceiling, that really depends on the broader market stabilizing.
So they're guiding based on execution, not economic optimism.
Exactly. They're focusing on what they control efficiency, closing deals, not betting on a sudden global economic upswing. It's cautious optimism driven by their own tactical moves.
And you see that kind of mixed picture in how different sectors are performing for them, too.
Right. Financial services is still their biggest chunk, about 27.7% of revenue in Q2. And that showed, quote, extremely good growth, 5.4% year over year in CC.
That's strong. Manufacturing was also mentioned as doing well.
Yes, but then you have the flip side, retail. They specifically said retail is still seeing constraints. Spending there is just, well, tight,
Even if they have a good pipeline of deals.
even with a good pipeline. That sensitivity in a major sector like retail is exactly why they're keeping that guidance capped at 3%. It
Yeah.
reflects the reality.
Okay, let's shift to talent. You mentioned they hired, what, 12,000 plus freshers in the first half, targeting 20,000 for the year?
That's right. Net addition was 8,000 overall in Q2, but the pace for freshers is really high.
But wait, in this uncertain climate, why commit so heavily to hiring fresh graduates? Isn't that a big long-term cost bet?
It is a bet, but it's a strategic one. It tells you they're building capability for, say, 5 years out, not just for the next quarter.
Oh, planning ahead.
Definitely.
Yeah.
They know if they wait until the macro environment is obviously booming to hire and train this next wave of AI-focused engineers, they'll already be late to the game.
So it shows conviction, belief that this current slowdown is temporary.
I think it absolutely shows conviction. Conviction that the demand for highly skilled new talent is going to be massive pretty soon.
Interesting. And geographically, any surprises there?
Well, Europe has actually been performing really well, consistently strong. But the U.S. is still framed as a very good market for growth and investment.
Which just means the sheer size of the U.S. market keeps it central, even if Europe has better growth rates right now.
Precisely. The scale means it's still the main event. And this is where it all comes together, really. The commitment to bringing in new talent, the capital they're generating from Project Maximus, it's all feeding this huge bet on landing large-scale AI deals.
This is where management's confidence seems to stem from.
Absolutely.
And the deal numbers look impressive. Total large deal value, $3.1 billion for Q2. But let me push back a bit here.
Yeah.
How much of that is just, old lift and shift work, dressed up as fancy digital transformation, versus genuinely new, high-margin AI stuff? Are they just padding the TCV, total contract value?
That's always the right question to ask with these big TCV numbers. But the source material, the transcript, it gave us a really crucial detail that counters that skepticism.
Oh, yeah. What was that?
67%. 67% of that $3.1 billion was classified as new or net new work.
Two-thirds net new. Wow.
Exactly. So if you're listening, and maybe you're a competitor, the fact that two-thirds of their big deal value is coming from new client budgets, not just renewing existing work, that means they're aggressively grabbing market share.
Yeah. That's a number that would make the competition sit up and take notice.
It's probably the most significant number for competitors in the whole report.
And then, as if $3.1 billion wasn't enough for the quarter,
Right.
they announced another mega deal, $1.6 billion, after the quarter officially closed, but conveniently just before the earnings call.
Yes, that timing was, let's say, strategic, not a coincidence at all.
Management making sure the market sees the pipeline is still strong.
Totally. Showing they could land these huge transformation contracts. And AI is central to that pitch, using it for client growth and for client cost efficiency.
And they mentioned scaling up a specific team to handle this.
Yes, they're forward-deployed engineers. They're actively growing that team.
Okay, and what do these forward-deployed engineers actually do?
Think of them as the specialists they embed directly with the client. They're the ones managing the complex, hands-on rollout of AI models, new tech platforms.
The execution arm, basically.
Exactly.
Yeah.
They're the execution arm for the AI strategy. And the projects cover a huge range, improving credit risk models, streamlining knowledge work, boosting customer service, even making software development itself more efficient. It's across the whole enterprise.
Right. The sources gave some examples. Haynes Renz was one, using AI for hyper-productivity in their digital and data operations.
Yep. And the collaboration with MasterCard on cross-border payments using MasterCard Move, giving banks easier access to faster, secure payments.
And there was one more. Something about an arena in Japan.
Yes. Glion Arena Kobe. They were named the official digital innovation partner there. The goal is to power smart, sustainable entertainment experiences. So AI isn't just back-office efficiency, it's a consumer-facing too.
Okay, let's shift gears a bit. We need to talk about some of the operational friction points and regulatory issues. These things always seem to follow big global firms operating in the U.S.
True, it comes with the territory.
First up, there's a U.S. Department of Justice investigation. It's about how Infosys classified certain employees who were recipients of H-1B visas.
Right. And their main defense, or maybe positioning on this, seems to be about localization.
Yeah.
They really stress that most of their U.S. workforce doesn't actually need visa sponsorship.
They're pointing to the investments they've made locally.
Exactly. They've built these centers and hubs across the U.S. focusing on digital, AI, tech. They highlight relationships with universities, their U.S. training facility. It's all about showing they're trying to hire locally and reduce reliance on the H-1B program.
But they did confirm the DOJ investigation is happening, and they've started their own internal look, but basically said, no comment for now.
Correct. Standard procedure while something like this is ongoing.
For you listening, what's the potential seriousness here? What does a classification issue like this typically involve?
Often these things relate to allegations about, say, mislabeling job roles to maybe get around visa quotas or pay requirements for certain visa categories.
So, potentially significant penalties.
If it goes badly, yes, the legal costs could be substantial. But perhaps more importantly, the reputational hit could be bigger than any fine. It's definitely a legal risk simmering in the background that needs watching.
Okay. Then there's the McCamish situation. That was the cybersecurity incident, a ransomware attack, back in November 2023 at a subsidiary.
Right, McCamish Systems.
There was a class action lawsuit, and now there's a proposed settlement of $17.5 million. That's about 150 crore.
Yes, and the key detail here, financially at least, is how they've handled it. The settlement got preliminary court approval back in July 2025.
So it's moving towards resolution.
It is. And they recorded the full $17.5 million cost as an accrual. But crucially, they also recognized an insurance reimbursement receivable of $17 million.
Ah, so insurance covered almost all of it?
Pretty much. It means the immediate financial hit to Infosys itself was largely offset. It was an expensive problem, yes, but it looks like it was an insured one.
Good risk management paying off there, it seems.
Seems like it.
And finally, just a quick note, they mentioned the acquisition of Versant Group. That's an Australian digital transformation company. That's proceeding, just waiting on the usual regulatory green lights.
Right, another capability buy, strengthening their hand in that region. Hashtag tag outro. So if we kind of pull all these threads together, the story of Q2 for fiscal 26, it really feels like a masterclass in balancing competing priorities.
How so?
Well, they're managing this sluggish macro environment by being super aggressive on internal efficiency. That's Project Maximus we talked about.
Right, manufacturing their own funding.
Exactly.
Yeah.
And that efficiency gain then becomes the internal bankroll for these huge long-term bets they're making on AI and large transformation deals.
So capitalizing on those big AI and efficiency deals, that's why the net new deal value, the 67% number, was so high.
Yes. But at the same time, they temper all that excitement with really cautious guidance. That 2 to 3% range shows they still respect the market uncertainty out there.
Strategic offense funded by rigorous defense, basically.
That's a good way to put it. So what's the big takeaway? For you listening, whether you're a client, an investor, maybe even a competitor.
Yeah, what's the final thought?
Something really interesting came up in the Q&A part of the earnings call. They were asked about the legal side of things, specifically around liability and indemnities in these new AI partnerships, especially partnerships with the big cloud providers, the hyperscalers.
Okay, liability and AI deals. What did they say?
The leadership stated that these questions are, quote, still not fully clarified.
Not fully clarified. That sounds vague.
It is vague. And that raises, I think, a really critical point for you to chew on. As these huge IT firms push AI transformation forward incredibly fast, what actually happens when the technology deployment gets way ahead of the legal and risk rules meant to govern it?
The tech is moving faster than the lawyers and the contracts.
It really seems like it. It feels like the entire industry is charging into this next massive digital wave before the legal foundations, the guardrails for liability and risk, are properly built underneath it.
So who's responsible when an AI system deployed in a big partnership goes wrong?
That ambiguity, that lack of clarity on liability in complex AI implementations, that feels like the really big systemic risk lurking under the surface that everyone involved, clients, vendors, partners, is going to have to navigate very carefully in the coming years. It's definitely something to keep watching.